Welcome to the program. I'm Mark Imperial. This segment's being brought to you by booksgrowbusiness.com. It's the place where busy professionals and entrepreneurs publish to inform their consumers, build their businesses, and to leave a legacy. We're doing a series of spotlights on remarkable experts across the country. And specifically on this segment, we're talking to a mortgage expert. Joining me is Michael Yrene from One Mortgage LLC out of New Mexico. Michael, welcome to the program.
Hi, thank you. Appreciate it.
Tell us a little bit about your work and specifically the types of clients that you specialize in helping.
So I've been in the business for 15 years now. Very well versed in all the loan programs, even some of the non-QM programs. We might need to explain that, but as a veteran, I'm proficient in VA loans, uh, conventional loans, especially high balance loans in Colorado, where I'm licensed. Um, New Mexico, we have first-time home buyer programs. So basically, whatever's on the menu, I have done or I'm in the middle of now.
Yeah, I'll take you up on that further explanation on that, the lingo for our consumers out there listening. What exactly are QM programs and kind of, you said you could explain that for us.
Sure. QM stands for qualified mortgage. And that is your, I don't want to say vanilla, but it's your typical mortgage program, whether it's a VA, FHA, conventional, or jumbo loan. These are called conforming loans, and they're underwritten by banks, correspondent lenders, brokers. Um, the non-QM, non-qualified mortgage is more outside the box. Bank statement loans, stated income loans, investor loans um, are examples of what a non-qualified mortgage is.
Very interesting. It almost sounds like some of those were like pre-2008 meltdown. Are those back? Are they different? Kind of speak to us about that.
Yeah, so the real difference there is that um, in the crash of 2008, I was a borrower and a lender, so I experienced it both ways. Um, Banks and correspondence brokers, they were doing anything they could to get a loan closed. As a result of the Financial Reform Act of 2008, banks and correspondents, brokers were nearly eliminated, but banks and correspondent lenders could no longer um, originate anything out of the blue, and um, and that's part of the reason the system can't fail because of these non-QM loans that exist again today. So private investors fund these lenders that invest in these higher risk loans that come with higher rates, not incredibly much higher, but higher to offset the risk.
That makes sense. So, what's the temperature of the market today? Now we're in this post-pandemic mode. The country's opening back up. What are the opportunities out there for folks today?
Well, rates are still, I think I can talk about rates. Rates are still very low. Let's put it that way. I can't cite a specific rate because then I'd have to cite an APR. But we're right around 3% depending on the deal. The non-QM loans are up in the fours. Um, the uh, the opportunity is restricted by the current market and the lack of supply. Um, Denver usually has around 4,000 listings. They've got just over 1,000 listings. Albuquerque normally has a couple, maybe 2,000 listings. We're below 1,000 listings. So while rates are good and demand is there, supply, which is driving up home prices, is good if you're a homeowner, but it's limiting our activity. I believe refinance applications are down a little bit. Purchase applications are slowing a little bit. People want to buy, but there's the new home inventory is low, and then as a result, the existing home inventory is low as well.
Wow, yeah, I have heard that inventories are low and there's a lot of bidding going on properties
Yeah,
these days. So like
crazy.
for a home buyer now, for the highest chance of success for
Hmm.
them, what steps would you recommend they take? Would you say they really need to get pre-qualified even more today than ever before?
I would take it a step further. I would work with a lender that can issue you a pre-approval letter. The pre-qual letter comes from our desktop engine from Fannie Mae or Freddie Mac. The pre-approval letter, you need an investor that will actually underwrite credit and income so that you can issue a pre-approval letter. It gives the selling realtors, the selling agents, more confidence in what they're looking at there. So just short of a cash offer, a pre-approval letter is much stronger than a pre-qualification letter. And it doesn't take any more time. It just takes some income docs. We have the credit report in the file, um, and boom, there you go. I mean, that's strengthen the offer however you can, um, but the pre-approval is the best step from where we stand.
Yeah, especially today with the multiple offers coming in, they
Yeah,
really want to see somebody that they can have confidence in accepting an
that's
offer.
correct. Yeah.
Michael, tell us a little bit about like what inspired you to get into originating loans. How did you get started?
Um, I was doing insurance. I did personal lines and small commercial for 6 years. And a friend of mine who had worked in the same agency, he said, "Why don't you come join us and do mortgages?" And this is back in 2006. And he said, "It's the same process. We have customer relations, we have underwriting, we have customer service, in other words, processors." Um, and it made sense to me. And so I started in 2006 from scratch. This was before licenses were required. Um, uh, and I was fortunate, the timing was fortunate for me because I could get in there and learn all that stuff and then experience the crash, which was difficult to get through. But then we had the licensing, and that has proved invaluable in part because of the continuing education requirements that we have each year. We stay fine-tuned on compliance issues, RESPA, and the Real Estate Settlement Procedures Act, um, privacy, all of that stuff that's important to the consumer and protecting the consumer's privacy.
Michael, for our listeners out there, tell them the areas of the country that you serve and can help them, and let them know how they can connect with you, find you, and learn more.
So I am licensed in Colorado and New Mexico. Recently, I was licensed in Virginia, Missouri, um, Maine. Forgetting one. But now it's just Colorado and New Mexico. My phone number is 720-682-9093. My email address is, I'll spell it out, Michael Yrene, MichaelYrene dot the one mortgage at gmail.com.
Terrific. Michael, I appreciate you taking the time and sharing with my audience today, and I wish you continued success for you and for all of your clients.
Thank you, sir. I appreciate the time.
Michael Yrene from One Mortgage LLC. And this segment's been brought to you by booksgrowbusiness.com. It's the place where busy professionals and entrepreneurs publish to grow their businesses and to leave a legacy. That's all for now. I'm Mark Imperial, and thanks for joining me.